An unexpected drop in both China's exports and imports in March has spread doubt about the country's growth prospects. I'm joined by James Waterson from World Economics in London. So James, would you be concerned about exports and imports? Now, is this a sign that growth is stalling? And do you think GDP could fall short of the government's target?
Yeah, I think clearly there's some question at the moment about exactly how well China's doing. The FT really nailed it this morning when they talked about rattled nerves. Now, we're seeing a fall in the underlying data that includes both imports and exports in recent months. I think that's reflected somewhat in the revised GDP figures that have been trickling out for the past few months, shaving a couple of percentage points off here and there. The more doom-laden analysts have been saying that we're seeing China as an economy that's powered through the last decade and is now starting to run out of puff. The World Economics view is that it mirrors that of Premier Li, who's been saying for quite some time that the Chinese economy needs to see more stable and steady growth, especially in the employment arena. Now, we all know that the Chinese data can be quite hard to interpret, and February and March data is often a little weird because of the Chinese New Year. However, I would certainly be wary of predicting growth stalling. But what is clear is that going to have some trouble sustaining the breakneck speed of growth seen over the past decade. But I think what we're actually seeing is a China that's now growing into a modern global economy. This slowdown of growth is kind of almost reflected in the growing domestic market and its new place in the world. So no, I think whilst, yes, GDP could start to fall, I don't think it's going to fall as dramatically as some are expecting.
Now, James, despite this latest data, the latest report of the Sales Managers Index for Asia shows that business confidence remains high, and the General Market Growth Index shows that the marketplace in Asia continues to expand rapidly due to China. So can you go into a little bit more detail about the findings?
Yeah, well, China is clearly, it's the key economy in Asia. Obviously, you've got loads of other economies, but they all do very much rely on Chinese manufacturing and the growth that emanates from that. What our March indexes have been showing is that growth over the past few months in March, continuing into March, have actually been remarkably strong and stable. Our China headline index, for example, has been hovering around the 56 mark since November of last year, only increasing by 0.1 from February to March. What that indicates for us is that the underlying economy is actually growing at a very strong pace. Our panelists have told us that they're extremely confident about the coming months, and indeed something which hasn't been covered very much is the anti-corruption drive by President Xi, which has actually had, for the average business on the ground, it appears to have struck a real chord. And indeed, when it comes to manufacturing growth in particular, that's been pretty strong. And we think that's reflected partly due to demand from the West, which is now growing again properly, and partly due to the growing internal market.
And James, before I let you go, is there anything else you would like to mention?
Well, briefly, I think whilst this trade data today has clearly struck some chords and some nerves, I think that the world will move on quite quickly. We'll see it's a short-term blip and that China is in fact growing at quite a fast pace and will continue to do so.
James, thank you very much. Well, viewers, do stay tuned as we have plenty more economic updates heading your way.